You just dropped another breaking news story in the crypto space. I didn't even have a chance to read it past the headline because it is that breaking, hot off the press. I'm going to read you the headline. You break it down for us. It is BlockFi CEO ignored FTX warnings and overruled risk team report fines. What can you tell us?
So BlockFi is a company that, at least until it collapsed last year, had a pretty sterling reputation in the crypto circles. It operated as, I guess, a pseudo crypto bank where essentially customers could deposit their tokens, Bitcoin, Ether, and several others, into, I guess, something. I think they called it a BlockFi yield account, which was, I guess, akin to a savings account at a traditional bank, and they would earn yields on their assets, sometimes a low single digits, sometimes in the teens. And BlockFi would make that money, would be able to pay those by taking those customer funds and lending them out to trading desks, so on and so forth. I mean, it's a similar model to banks, but obviously far less regulated. And BlockFi really got into trouble last year when they were exposed to a hedge fund called Three Arrows Capital that famously collapsed in May, and at some point they got into contact with Sam Bankman-Fried, the former CEO of FTX, who is obviously facing his own legal issues right now. And at that point last summer, FTX was kind of seen as a savior or a white knight of crypto because they were bailing out or purporting to bail out a number of struggling firms. BlockFi, Voyager, which was another brokerage firm based in New York that traded on I believe, the Toronto Stock Exchange, and BlockFi received, I believe, like a $400 million credit facility from FTX, and a lot of that was secured through loans. And then they took on a bunch of FTT, which was this token created by FTX on its balance sheet. And eventually, what a report today finds, and it was produced on behalf of BlockFi's customers, its unsecured creditors committee, basically all the people that are hoping to get their money back. They're finding that as BlockFi got into increasingly dire straits, the credit risk team within BlockFi was alerting CEO Zac Prince about the growing danger of taking on more and more exposure to FTX, principally in the form of FTT tokens, which they took as collateral to lend out additional customer funds to FTX. And CEO Zac Prince essentially disregarded those warnings and decided to keep taking on this balance sheet risk, despite the concerns. And at some point, I mean, BlockFi is in its own bankruptcy case right now. There are a lot of creditors wondering when they're going to get the money back, and this is just another report. It originally was filed in a redacted form, and as of last night, it got unsealed and became public. So we were able to get a look at it and publish an initial story. But this is something that will continue because BlockFi, although FTX gets most of the headlines, BlockFi is another major crypto bankruptcy that has become quite contentious.
Steven, I want you to be point blank with us. How damning is this report?
It is pretty damning. I mean, they do show text message chains, evidence from a lot of interviews, so on and so forth. But that said, it is a very one-sided report. It was it was created for transparency's sake, but it was paid for by the creditors committee, so it shouldn't necessarily be seen as like an independent arbitrator's report. Although the team behind it, I have no reason to suspect was acting in poor faith. But again, these are allegations, and everything will still have to be proven in court. That said, the details of it are pretty detailed, and some of the text chains, et cetera, within it do make for an interesting read.